Hey, what's up, guys? It's me, Jesse Soto, back again from Texas American Title in the Heights. And today, my guest is the man, the myth, the legend in his own mind, Matt Weidert from LongLeaf Lending. What's up,
I
Matt?
don't know about that. Hey, what's up, everybody? How y'all doing? I'm happy to be here. What is this, episode number 6?
Episode number 6.
All
man.
right.
Episode number 6. It's good to have you because, I mean, you've been in like some pretty big podcasts, and now you're on the biggest, closing cocktails.
This is just what you need to get some momentum and kind of take it to the next level. So
100%. We're glad you're here. But the cocktail we're making today is none other than the Ranchy, a.k.a. the Ranch Water. There's been many a times where me and Matt have been chilling on 8 Row Flint, and they're not sponsoring. Having some Ranch Waters.
Maybe a Marfa Spirit Company sponsoring.
We'll give Marfa Spirit Company the sponsor, yeah. So Ranch Water is quite easy. All it is about 3 ounces of tequila or any agave spirit. We're using Sotal today. Marfa Spirits, they're Chihuahuan Sotal. It's kind of like agave. I always tell everybody it's like between a mezcal and a tequila.
Yeah, I think it kind of falls kind of right there in between. It's definitely a good way to put it.
Yeah,
not as smoky as mezcal, but
not
definitely
as
not
clean.
Tequila.
Yeah. And the closest relative is the artichoke, which is crazy. So it's Sotal or tequila or mezcal. Topo Chico, it's a must. A little bit of lime.
Yep.
And I freshly squeezed some lime juice, and we're going to put that here shortly, and you're going to garnish it with a lime wedge. So let's go ahead and make this bad boy.
All right, which one help with?
So
you got it all already.
Dude, I pre-prepped. So we're making 2. So usually it's 3 ounces of tequila or Sotal. So I'm going to do 6. Whew. Love that Sotal smell, man. So Matt, you've been in the industry for about 4 years?
Yeah, that's right. I started lending. So LongLeaf is my company. My partner, Pete Underwood, we started it about 1.5 years, 2 years ago. But prior to that, I was doing it as a side hustle while I was still kind of working in a W-2. So it's been good. We're based here in Texas, in Houston. We'll lend anywhere in Texas, and it's been a fun ride. Excuse me. So far, the reason I actually went from side hustle to full time on the company is my company that I was working for they decided to shut down during COVID, and it was great because I just had this other thing that I was able to jump into, and Jesse and I have been able to do some deals together, and it's just been a fun part of the Houston real estate community so far.
That's awesome. I'm gonna shake this right fast. Yeah, you said you were doing it before, just on the side hustle with your W-2 job, and COVID kind of kicked you in the butt, eh? Just to kind of do this whole thing, like make it full time.
That's right. Pete and I had been talking about kind of getting together and kind of building kind of more of a public facing company. I mean, we've been lending for myself. I think it was about 2 years, and Pete had been doing it a lot longer than that. And Pete has a lot more experience in the real estate industry. He's a wholesaler at one point, owns a bunch of real estate, and so we would always just come together and kind of hang out and talk real estate. So even before I got laid off, we talked about kind of getting together and starting the company, and so we were getting things ready to go kind of before that happened.
That's awesome, and it's crazy because I've done, like you said, we've done several deals together, and hard money or private money it's a little different than the going the regular loan route, right? I mean,
for sure,
you can close like so fast because I mean we've done closings with you guys like really quick. I'm just like, wow, that's pretty crazy. And sometimes like you're waiting on us.
When's title gonna be clear?
Whenever you're ready. So that's pretty neat. Let's have a sip and we can talk about that. Cheers.
Yeah, sounds good. Cheers. Tasty. Well done.
Hey, this is my first ranch water.
There you go.
So pretty good.
So to your point, if you're not familiar with private lending or hard money, it's the same thing. You might hear either of those two terms, but it's not like a conventional loan. If you're going to get a mortgage on your house, you wouldn't come to somebody like me. So the biggest thing that differentiates us is that we can just move really quickly. A lot of time in the investor community, these deals need to close pretty quickly. A lot of them are off market, and you just need to move fast, like within a week or two. And like Jesse mentioned, sometimes number of days, and we have that flexibility. Like we can close something within 24, 48 hours. We don't typically ever have to do that. We could if we really wanted to. Usually there's probably something wrong with that deal. It kind of fell apart and we're going to go in and rescue. But, we control the capital. We control the process. We're a pretty nimble company. I think we're up to about 8 employees now here in Texas. And, we can outcompete most of even the other private lenders out there as far as speed. But as far as just private lenders in general, that's why we exist. We can move fast. We don't have a lot of process. And I think the other thing that's big compared to conventional lenders, like if you were to go get a mortgage, is income verification. And so really at the end of the day, we're focused on the asset, its cash flow potential, what our loan value is, and we just have to be comfortable with that. And we're underwriting the asset first, and then I think the borrower second. And I think it's flipped a little bit in kind of conventional lending.
Yeah, no, for sure. And before all this, I mean, you're from California?
From California.
Okay, and then you moved here, and you were in the Marines.
I was a Marine, so born in California, went out to school, Colorado, and then was a Marine for about 5 years.
Thank you for your service. That's awesome.
Appreciate that, Jesse.
Yeah, of course.
So ended up getting out. I was living in San Diego at the time, came out to Texas to take a job in energy. My business partner, Pete, was also in the military. He was in the Navy and been living out here too. And, we ended up coming together and working together in the energy industry for a couple of years. That's how we know each other and why we ended up starting this company together.
That's awesome. That's awesome. So what's your, if say I'm an investor, what would be your ideal investors? Just somebody that's found a property that's, for a really good price, undervalued. Then, I mean, is that pretty much the best, or what would be your ideal investor?
Sure, that's a good question. We'll work with anybody. There's some lenders out there that don't want to work with folks that are new to the game, or that tend to just want to focus on experienced investors. We'll work with anybody. Again, we're focused on the asset, and so we'll definitely talk to you. But for the most part, I'd say most of our investors are doing this game, but they're doing this as a business full time. And then the ones, there's a certain portion, maybe, I don't know, less than a third, maybe a quarter, have some type of full-time job, and they flip houses on the side, maybe kind of 1 or 2 projects at a time. But it's typically people that are going out and they want to either flip houses and make a quick profit by that difference between what they buy it at and what they sell it at, or they're trying to build a portfolio of cash flowing assets, like long-term rentals. In some cases, short-term rentals. You're hearing a little bit more about that as well. So really anybody that's interested in investing in single-family residential, that you can consider that like 1 to 4 units. That's kind of our bread and butter product, lending on that. We can do other types of products now. We've got a ground-up kind of new development. We're closing on a big loan here in the Heights tomorrow, actually, over here on Waverly.
Oh, nice. Yeah.
It's going to be like a 4,000 square foot house, for example. We can do multifamily up to about 10 million. So not huge multifamily buildings, but some of these kind of infill locations that are 8 to 15 units are starting to pop up, and some of our investors a little bit more experienced are starting to kind of move that direction. Once they graduate from just doing single family, they got more experience. It's kind of the natural step. They try and go after bigger assets so they can scale faster.
That's awesome. And usually you do, what is is it the same, would I put the same amount down on, say, like if I'm looking to flip a home, would I want to put the same amount down, the 30%, or is it something totally different?
So I would say a pretty typical loan for us is somebody that's buying something that needs what you'll hear is value add, or will need some type of rehab. And so they're buying this property off market, typically, not always. Sometimes these properties are listed, but they're going to go buy this property and put a little bit of work into it, call it whatever, $25,000, $50,000 rehab. And at the end of the day, once that property is completed, and we call that the ARV, it's worth more. So you're doing that value add. You're creating equity value by the sweat equity that you're putting into the property. Nice. And so because of that, we'll look at what, all right, you have this rehab budget you're going to provide to us. It's $50,000. You're going to do, X, Y, Z on the property. When that's done, we'll look at and we'll consider what is the property going to be worth. And so we can get aggressive on the purchase. Typically, we'll lend up to like 90% of your purchase, because at the end of the day, once you finish the project, it's going to be worth a lot more. And we usually set that threshold on the after repair value, the loan to value, to about 70%. So those are two kind of good rule of thumbs. Some lenders are a little bit higher, some are lower. There's a lot of moving pieces, but typically you're going to be somewhere around 10% to close, from the investor, and the lender is going to be is going to want to be somewhere around 70%, maybe 75% on loan to value, depending on the property.
That's awesome. And how? What's your average time for a loan?
So for the most part, our products are short term. We looked at this the other day, and I think the average loan outstanding on the portfolio in the first 2 years has been 4.5, 5 months, somewhere around there.
Okay.
As far as like when they signed the loan docs to when it was actually paid off. And so most of our loans are under 6 months, or most of our loan maturities, we'll set them to be somewhere between 6 and 9 months. We will not typically go over a year unless it's a ground up development project or something that's a lot more involved.
Yeah. Okay. Are you seeing any, I know a lot of folks use private money for the BRRRRs. I know that's a big word or whatever in the investor market. Yeah.
Sure. What does it stand for?
What is it? Buy, rehab. What is it? Buy, rehab, refi, and redo, whatever. Or repeat.
Buy, rehab, rent, refi, repeat. I think the rent comes first, because to get the refi done, I think sometimes they want to see a lease signed on it.
Yeah. I was close.
Yeah, you're close. We'll give you credit for it. So, are we seeing a lot of that right now?
Yeah.
Is that the question?
Yeah.
We did do quite a few of those last year. I think right now it's a little bit more challenging. So I guess, where are we? Mid-May, almost kind of middle of the year. And if you're following news and such, we've had a bunch of interest rate increases, and that's affected mortgage rates. That's affected our long-term rental products. So we have a rental loan. Our rates were in the threes, just about a little bit over a month ago, kind of starting, for the most well-qualified borrowers and kind of lower loan to values. Those same rates are now over 7.
Jeez, so, just from a month ago.
Right.
Wow.
So it's pretty challenging. I think you can still get it done. There's ways that you can buy down the rate by putting a little bit more down at close, like by putting an initial point or point and a half. And so you really got to be buying right to make those numbers work. You can't just rely on rent growth anymore.
Yeah.
You can. I think rents are going to still keep rising. But to be able to get that deal done, to get that refi right now, I mean, it's pretty difficult to get it's called debt service coverage ratio. So you want to make sure that your revenues divided by all your expenses is clearing, for different lenders, it depends. I think 1.1 minimum is kind of a good rule of thumb right now. You can get lenders to go below that. You can go below 1.0. But it's just challenging to make that work, because for your debt service coverage ratio, that's your revenues, which is your rent income, so what the tenant is paying you, and your expenses are, I think it's really 4 things. It's your principal and your interest, so your note payment, and when rates jump from 3 to 7%, that's a big change. That payment goes up quite a bit, so that's eaten into your ratio. And then the other 2 things are taxes and insurance. And with property prices or property values increasing, taxes have gone up. Insurance rates have gone up, so it's a lot more challenging right now. I'm not saying it can't be done, but I think the whole industry has kind of hit the pause button or hit the reset button, and we're kind of waiting to see what happens.
I'm sure with your clients too, because with the taxes, it's even going to be higher, because usually it's not their homestead if they're buying with you, so it's usually an investment property or whatever like that.
That's right. So they don't get the incentives from owner to homestead.
So the homestead.
But we're still doing. April was extremely busy. May's been busy as well. So investors are still out there buying properties. I think it's just the strategy changes. You just might not be able to get the BRRRR done as easily right now, but you can still go buy properties, improve them, and sell them, and make good money doing it.
That's awesome. Yeah.
What are you seeing? So you're seeing tons of transactions.
Yeah.
Here at Texas American Title, and I know you work with a lot of investors. So are you still doing a lot of refis, or are you doing more sales?
Man, refis they've dried up. They've pretty much dried up.
The same thing that I'm
yeah,
saying.
because give it like even last year when rates were, nothing. Most of our stuff, it was probably maybe about 50-50, maybe even higher on the refis some months.
Okay.
But now it's probably 20% refis. Yeah. It's dried up because usually, everyone heard it last year, like, oh my God, you need to refi now. So everybody who refied kind of refied. But yeah, no, it's dried up a lot. And I've talked to quite a few lenders, conventional lenders that were saying kind of the same thing.
Interesting. Well, we'll see where things go.
Yeah.
It doesn't sound like the Fed is done raising rates, so we'll see how that goes. But yeah, what else you want to know from a hard money lender, Jesse?
Man, I've got so many questions for you. Actually, I've got so many questions.
Great. How much time do we have?
We have all day for you, Matt. All day. So you live here in the Heights. Do you do a lot of your stuff in the Heights, or is it kind of all around?
I mentioned that property earlier, the one that's over on Waverly. We do stuff in the Heights, but we do stuff all over Houston. We go down to Galveston. We have a pretty good presence up in Dallas. We're starting to kind of increase the number of loans we're doing in San Antonio and a handful in Austin. Austin's been difficult just because property values there have just been crazy. So it's hard to get those numbers to work. But
so you do all over Texas.
Yeah, we'll go all over Texas. Can't be too rural, but we'll consider kind of anything within the state.
So anything close to Marfa Spirit Company
I'll look at
Marfa, Texas. I know you've done a few in the beautiful, they usually call it God's country of Splendora.
I have done a couple of Splendora.
You've done a few over there too, which is awesome.
Those were good loans. The investors made a bunch of money on those.
That's good.
You wouldn't think that's like, and we've seen that trend too. I mean, a lot of people have gotten into real estate, especially during COVID. I think for whatever reason, people looking for a side hustle or were at the office working, had some, free time without their boss looking at them. And, a lot of people jumped into real estate. And so some investors have been successful going to these areas like Splendora. You probably don't, if you're not from Houston, probably don't know where that is, but
dude, most
a lot of people from
Houston
don't even know.
Yeah.
So yeah, it's just, you keep heading north from here. It's just this little community that Jesse knows a little bit about, but that strategy has worked. Yeah, you're not going to be able to find lenders that'll go to all those little smaller towns, even though they're pretty close to a major metro. But have seen some good success. You have to find the right lender for something like that.
Yeah, you really do. Which it seems like you are the correct lender for that LongLeaf lending.
We will consider anything in Texas.
Dude, I like that. That's awesome. So we were kind of talking about 8-row a little bit, and again, I mentioned that you are from the Heights. So what places do you guys like? Like you, your wife, your kiddos. What places do you go to? Just maybe on a date night, or just if you want to grab a cocktail or quick dinner.
Oh, the kids. So I've got a 5-year-old and a almost 2-year-old, and so we don't eat out a ton. Just us and the kids. It's just so much easier to cook at the house.
Yeah.
But we'll walk usually. Heights is such a great area that there's so many things within walk distance. 8 rows, great. It's kind of more of a kind of date. Brittany and I will, before picking up the kids on Friday, usually we'll try and hop out somewhere like BLT, Better Luck Tomorrow.
Yeah, love that spot.
Come up to 8 row and grab a drink before just going and picking up the kids.
Sometimes you need a drink before you pick up the kids.
Yeah, or after picking up the kids. So yeah, 8 rows, good spot. We'll go to BLT. You can walk down to White Oak. There's a bunch of bars and restaurants down there. There's a lot more coming online at MKT. You been down there yet?
Yeah, I have. I was just there yesterday.
What was there's a new coffee shop that was just blowing up.
Is that Lala?
Yeah, Lala Land.
Yeah, Lala Land or Lala Coffee or whatever.
It seems like I was watching a bunch of people walk through the Heights on the trail carrying these yellow cups. And I figured out what it was. It was Lala Land, and yeah, it's just slammed.
Dude, they're all over Instagram. That's all I see. Is that Lala Coffee or Lala Land Coffee or whatever it is. Yeah, I need to check that out.
It's good. It's busy, and their Wi-Fi could be improved, but I
can't work from there.
Checked it out this week, so yeah. Well, generally we like going places that you can walk, and the Heights is such a great neighborhood for that.
It is, and there's a lot of young families that are walking and stuff, and it sucks because I used to live literally
I know.
down the street from me. And as soon as we left, they did all that stuff right there. I mean, all of it. They've had that Cafe Nomad now and all those new restaurants and all those spots. I'm just like, as soon as we leave, of course.
What about you? So you're out in the burbs now. You spend most of your time.
Suburb life.
Spend most of your time in the Heights.
Yeah.
What do you guys like to do as far as going out?
Man, a lot of time we'll come out this way, even on the weekends. But again, the Heights has changed a lot since we've lived here. It's just whenever so my 2 escrow officers and our processors were working one Saturday, and I was like, you know what, I'm gonna bring them breakfast. So I came out here, and was at Common Bond, the kind of smaller one right off of the Heights Boulevard.
A little drive-through.
Yeah, and dude, it was so packed. Like, it was insanely packed. The wait was almost 30 minutes, and I was like, this is insane. It was just so congested. Like, Heights has gotten like really congested, like in the main areas. So I was like, this is crazy. That's changed a little bit. But yeah, no, out where I live, Chili's. Chili's is a big one. Fridays, Ruby Tuesday.
Home Garden.
No, there's this one spot I talk about all the time. It's called White Elm, and it'd be right up your alley. Next time you come out our way, we'll take you. It was the guy that opened it was the Houston bread man.
Okay.
And he just makes some of the best bread and pastries and everything. But the food's fantastic. Coffee's great. All the pastries and the bread are just insane. It's almost like something built in the Heights was moved out to Memorial. And it's pretty awesome.
Sounds good, but the only problem is I just was at your house.
That's right.
Last weekend, and I only make one trip outside the loop a year, and that one's done.
But see, the thing is, living out that way, it's just, we don't really have to go anywhere because we've got a pool. We've got the grill right there. I barely have to leave. I mean, it's so nice.
Trade-offs, my man.
Yeah, and our public school system, that's the main thing. That's the main thing. Yeah.
Yeah, I know. Might be out there at some point. We'll see.
Well, no, you're going to be moving out to West area.
Yeah, we're thinking about it.
So. I like that. And we, and Matt and I, we actually went to Marfa not too long ago. Last year.
Yeah, it was it March last year?
March was last year?
I think
that was a blast. That was awesome.
Yeah, we're thinking about making another trip.
We need to.
A lot of developments out there.
Mm-hmm. There are. I saw actually yesterday. I was at a networking thing, and it was really cool. This guy, he's a plumber, and he was talking about Bernie, and there was this billionaire that lives out there. He deals with catalytic converters. Okay. He ends up like recycling them or whatever. Mm-hmm. And him and his business partner bought 2 plots of land across from like near each other. And this guy that he did all this work for, they dug a massive a massive cave for his wine. So he has all his wines in a cave, and he's doing all the plumbing for all this. And there's legit a train tracks that go from like the cave to his house, and it's just this massive thing. Him and his business partner, and they've made billions on recycling catalytic converters. That's why.
There's a lot of boring businesses out there that you can make a lot of money on.
Private lending, that's one of them.
That's one of them. Yes, I don't know. We'll see. Ask me in a couple of years.
We will. You'll be the next billionaire next door to those guys.
I'll come do episode number 100.
100. Yeah, you'll be.
There you go.
I like that. 100. It'll be the billionaire episode.
Jesse, come on, man.
Matthew Weidert. Do you go by Matthew, or Matthew? Is that?
I go by Matt. You guys can call me Matt. Jesse.
That's awesome. So if you have any advice for anybody about, if they're wanting to get into investing in real estate, anything like that, I mean, do you have any good advice for that? Just come talk to you first, or find a good realtor, find a good agent?
Yeah, I think building your team is probably pretty helpful. Network with a couple lenders, talk to some agents. I would also say that just showing up and meeting other people who are trying to do the same thing as you is really helpful. Kind of like your own little mastermind. Like, find some people that are like-minded that you can share ideas and learn from each other is huge. And if you don't know anybody like that, there's tons of these investing groups in each city. Every major metro has got them. A lot of the, sometimes the easiest way is ask around or look on Facebook You can just search in Facebook groups. That's a lot of the investors are on Facebook, and they share deals and share advice. And so I would start there. I mean, it's really easy just even to pay attention to those groups, just to learn the lingo, to kind of find and network with kind of other service providers or lenders or agents. And just show up and shake hands and meet people, and that's how deals get done. Just you can't do it from your computer. You got to get out there, visit properties, go meet people, show up at these events, and do enough reps on that, and you'll get your first deal done.
That's awesome, dude. And if they want to get a hold of you, how can they locate you? Website, Facebook?
Well, I'm on. We're on Facebook, LongLeaf Lending. We've got a website with a bunch of information on it. I'm on Twitter as well, Matt Weidert. You can reach me there. We got email, phone on the website. So, yeah.
I like it. I appreciate it, man. Thank you so much for coming out.
This was fun.
Yeah, you are the probably the most, the biggest guest I've had.
Oh,
I know you've been on all those other podcasts. So
no, and if you're wondering why I'm wearing my shirt, wearing a t-shirt, I was out looking at properties since since noon, and Jesse texted me. He must have had some other big guests cancel.
They were huge,
and
actually.
So I wasn't able to get home, nor did I realize I was supposed to be, dressed up a little bit nicer. So I didn't realize we were videotaping.
You can only fix up a 10 so much, Matt.
If you're wondering what a private lender wears to work every day, it's this. So.
See, kids, you could be that. But guys, cheers until next time.
Yeah, hey, cheers.
We'll talk to y'all later. Cheers.
All right, man.